All right, guys, welcome. So, I want to cover one of the main questions I get from people about trading. And the question is, how do you spot reversals in real time? Because what I see plenty of people do is try to guess the bottom of a move or guess the top of the move, and then they end up getting stopped out because price keeps running either to sell side or to buy side, and they don't really know why. So, the first thing I would tell you is to have conviction in your daily bias, your weekly bias, or the market narrative. You have to have a good understanding of where the market truly wants to go. So let's say, for example, you want to catch a bullish reversal because you think price is going to reverse back up. But there's actually some equal lows on the hourly time frame that we have not taken out yet. So you're not actually reading the market as the narrative. You're just trying to guess where the market's going to go next instead of waiting for the real move to happen. The next thing people do is they don't wait for a real reversal pattern. So the main reversal patterns that I'm looking for are breaker blocks, unicorn models, and SMT divergence to give me that extra conviction that the reversal is actually going to happen. So let's jump into the charts right now, and I'm going to give you some actual examples of how to spot these reversals in real time. Okay, so I have the 15-minute time frame pulled up on the right side on NQ and the left side on ES. And the reason we look at both ES and NQ, whether you trade one or the other, is because they're correlating markets. So typically you want to see them moving in the same behavior or the same patterns. When they don't move in the same behavior or the same patterns, that's when you're looking for a little bit of a change in one of these markets. So I solely trade NQ, but I'm looking at ES constantly to see what is happening between the two markets. So the first thing I want you to focus on is on NQ, you see we formed some lows right here. Okay, so that is sell side liquidity right here, or SSL for short. If we look at ES, these are the same exact lows right here that we formed on the 15-minute time frame. So that's more sell side liquidity right there. Okay, so what's important about this is ES never comes back for those lows, and it shows a bunch of strength up to buy side. It shows that it wants to see a continuation to grab buy side liquidity. And another important thing to note is that overall we had a bullish bias during this price action. So we wanted to see price move higher, but we had to just wait for some discrepancy in price to give us the conviction to now look for longs. So what are we looking for? It's SMT divergence, right? NQ comes back down right here and sweeps these lows, creating SMT divergence because ES never actually did sweep those lows. So we see NQ come grab them, and we see down here ES never comes back for them. So this is where we create SMT. This is our first indication of a reversal. Okay, so NQ comes down, sweeps, and then we pump up to our buy side liquidity level because remember we had a bullish bias. This is what we wanted to see ultimately happen. So we came up for buy side liquidity right there. So this is SMT divergence in a nutshell. You want to see a small change in price between ES and NQ or whatever correlating markets you're trading. You want to see either a sell side level created and one of the markets take it and the other not, or a buy side liquidity level made and the one of the markets takes it and the other one does not. All right, so let's move on now to our next indication of reversal. All right, since I'm trading NQ, I'm now looking for a breaker block or a unicorn model to show me that this is truly a reversal because SMT divergence by itself is not going to be enough. I need to see a little bit more. But if we look on NQ, we can see we created this low, this high, and this lower low, and then we displaced the high with the fair value gap. This is a unicorn model. This is a bullish unicorn reversal model. So the first thing I'm going to do is chart out the highest up close candle on the first low to high. This is our highest up close candle right here. So this is our breaker block right here. So you can title this bullish breaker. Okay, we see that we traded back into it and then we saw an instant bounce right off of that. But we also want to look at the fair value gap, right? We see this fair value gap right here on the 5-minute or on the 15-minute. That's actually our full unicorn model right there. So we can title that unicorn. Okay, so once price trades back into either the fair value gap or the breaker, you want to see a good reaction off that level for you to target your long entry. Now, I wouldn't target my entry the second we trade into the unicorn. I need to see a bounce off of it. So I would wait. I wouldn't get my entry anywhere here. I would wait for us to truly bounce, and then I would look for my entry to go target our buy side liquidity. Okay, so we even created more buy side after we took our original liquidity level. So I would even look to target that buy side up there. Now, I know we did not create our liquidity or our bullish breaker or unicorn over here on ES because we never came back down and swept our low because remember, A breaker is a low high, lower low displacement of the highs. A unicorn is where the fair value gap overlaps the breaker. But this is just another indication that we're actually seeing a reversal in the market or a strong retracement move in the market, right? So we saw our S&T divergence between NQ and ES. We saw a bullish unicorn model created. That gives me the conviction to now jump into a long position. So, in summary of everything I've just gone over, what you really need to focus on is finding real models in the market to give you real reasons to jump into a trade. You cannot just be loosely trying to take irrational trades because you think this is going to be the bottom or you think this is going to be the top. You need to see things like SMT divergence, like bullish breakers, bullish unicorns, or bearish unicorns. If you truly stay patient for these setups, you are going to save yourself from so many losses in the market and you're going to start taking actual A plus setups. So you need to have a good overall market or daily bias. You need to know what the market narrative is. You need to focus on what are our liquidity levels, where are we truly targeting, and look for those entry models. And all of those things wrapped together is going to give you such a better strategy when you are actually trading. So this is how you spot reversals in real time. And I recommend you start practicing charting out these levels right now so that once the market is open and you are looking to actually trade, you can spot these a lot easier than you could before.